Palisade Global Investments is pleased to present the Hard Asset Conference on Jekyll Island, with keynote addresses by Eric Sprott and Dr. Edward Griffin, author of The Creature from Jekyll Island. The event will be sponsored by Triumph Gold Corp, currently drilling its 100% owned Free Gold Mountain project in the Yukon, and by Mexican Gold Corp, just weeks away from publishing its maiden resource on its Las Minas Gold project in Veracruz State, Mexico. Come join us at the Jekyll Island Club from October 19th till the 22nd. The event is limited to just 50 participants. Visit palisadeconference.com for more information. Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. We're back with a Sprott Palisade Monthly Market Update with Rick Rule. We're phoning him today instead of on Skype. Rick, welcome back to the program.
Always a pleasure to be with you, Colin. Thank you.
Yeah, I wonder if the ingredients are in place for a rally to start in these mining stocks. The one thing that leads me to that thought is how many negative comments I've been getting on YouTube videos that I'm posting about a potential gold rally coming. I've never seen such negative sentiment from gold bugs.
Well, negative sentiments from gold bugs is probably a good thing in terms of contrary indicators. My experience has been that commentators usually talk their book, and if their books are full and they're feeling bad, that's probably a very good indicator that things are going higher. That's not a forecast, by the way, but I feel pretty good about the markets myself.
What in particular, Rick, has you feeling good about the markets? Let's start with precious metals, resource stocks around the precious metals.
Well, the precious metal stocks, simply the underlying strength in gold, despite the fact that volatility in the broad equity markets are still strong, despite competing opportunities like a strong, if overvalued, bond market, the fact that gold has maintained its strength through the summer in the face of general economic complacency, I think is very, very attractive. And then, of course, the fact that the gold stocks haven't kept pace with gold, the gold stocks continue weak while gold is strong, tells me that one of two things has to break. Either the gold has to break lower or the gold stocks have to break higher. Finally, we are starting, I think, to see a news cycle in the gold stocks. I look at, as an example, the drill holes that were released, particularly the Kirkland Lake drill hole at Fosterville, which in terms of grade per vertical meter was an astonishing hole, but also a very good hole that came out of Barkerville, sadly a name I don't own. So I would say the combination of news, good, the gold price, good, and equity underperformance, ultimately good, has me feeling okay about the gold space.
Rick, how much importance do you place on the U.S. dollar as it affects gold? Obviously, gold is priced in U.S. dollars, but what I'm getting at is the fact that the U.S. dollar has been going down all of 2017. People are a little bit nervous if there's a rebound in the dollar that gold might get left behind.
The U.S. dollar expressed by an instrument, the 10-year Treasury, I think is all important. In particular, the delta between the 10-year tip yield and the inflation-adjusted yield and the 10-year Treasury, which expresses institutional investors and savers' confidence in the dollar itself. I think that's the most critical relationship. People use other narrative, Trump, Korea, things like that, to express a rationale for doing things that they're really inclined to do because of their perception of the strength or weakness of the U.S. dollar and the real yield on U.S. Treasury instruments. I think that's the most important part of the gold price.
What is the sentiment currently like amongst the bigger players in the business? Guys like Robert Friedland, Lucas Lundin, yourself, what is the sentiment feeling like from the big names?
Very strong. I had dinner last night with Lindsay from Tech and Lucas Lundeen, and several other pretty good-sized investors. And I have to say that there's a quiet confidence in place among them that is astonishing. One of the sub-themes I think that you're seeing in the junior markets is that the industry itself, whether it's Tech or Agnico Eagle or BHP, the mining industry itself has become the financier of choice to high-quality juniors. And that sort of sophisticated investor in this space, replacing the generalist, momentum-oriented hedge fund, is the best possible fundamental that I could think of. Capital that is patient and knowledgeable, replacing capital that is ignorant and short-term oriented, I think is very, very positive.
If I think back just a couple of years, there was talk when all the commodities were at the bottom, there was a lot of talk that the precious metals made the most sense to allocate to. But we've been a bit surprised. Some of the best performing commodities have in fact been industrial type commodities. Does the industrial metals performing this way surprise you at all?
No, not particularly. We talked in previous interviews about the fact that industrial commodities bear markets are resolved either by demand creation or by supply destruction, and that while supply destruction was messier, it came more dramatic. And I think particularly in places like zinc, you're beginning to see supply destruction. It's true that in the minor metals, the so-called battery metals, you are seeing demand creation, and the market is moving there. But I think what's of more interest to the mining community, maybe not the speculators, but to the mining community itself, the seeing in markets as diverse as metallurgical coal, iron ore, copper, and of course zinc. And I think that those markets haven't moved so much on the generation of additional demand through a strong economy, but rather the fact that there are supply constraints brought on by an extended period of very low prices and capital cannibalization on the parts of the producers.
In previous interviews, Rick, we've discussed the potential that a large new discovery could spark a resource bull market. In the past, we had companies like Bre-X in the 90s, which fueled a lot of capital into the market. The one I'm talking about now, which it's yet to see if it's going to be a big discovery, but many people think it is Novo Resources. Do you think that this could be a company that sparks that move?
Well, I certainly hope it does. I have a lot of time for Quinton Hennig, the CEO, and it's good to see nice guys finish first. That's not a prediction, by the way, but the idea that he had a really big picture conceptual target and was willing to articulate it well enough that he was able to raise the capital to drill a wild idea and has thus far enjoyed success. Were that to take place, in other words, were the success to be real, and again, that's not a forecast of mine either, that would be extraordinarily good for the market. I remember well the market that we had in the early part of the 1990s, probably too early for you to experience. But that was a discovery-driven market, and it came out of a badly oversold situation. And there was this convergence of discoveries that took place at that point in time, large discoveries. And it was the most violent bull market that I have experienced in my entire career. You know, that the mineral exploration business is one of the few businesses in the world that can give you 100 baggers, that is, stocks that increase 100-fold, not 100%. And the emergence of 100 bagger in the space does two amazing things. First of all, it adds an incredible amount of liquidity to the space, simply because so much value gets added in such a short period of time. But it also brings hope and greed into the space and the anticipation of success. And in fact, an understanding that there's some upside to go with the downside that everybody experienced over the last 5 years. So a discovery-driven market is in many senses the most interesting of all bull markets. I'm interested in the great work that John Kaiser has been doing recently in the driven market here. And the fact that if that happens, that the market leadership will go from the sort of $4 billion market cap companies that are included in the GDXJ down to the $20 and $30 million market cap companies that are led by the innovative explorers. That would be something that I think would be great for the market and ultimately great for mankind.
Rick, on the other end of the spectrum, and maybe a story very close to your heart, is Paladin, which is now delisted, and that's a story of supply destruction in the uranium space. It was actually a decently profitable mine if uranium prices were not so depressed. But is this another sign that uranium is getting closer to a point of turnaround?
It is. I can't tell you when, because as we've discussed before, a turnaround in uranium really requires Japanese restarts. But it's confirmation of the fact that the $20 to $22 a pound uranium prices are not sufficient to retain supply. And it isn't just the Paladin experience, the experience that Rio is having. That is happening with Areva up in Niger, that the Chinese are experiencing at Husab. These are great big deposits, clearly high-quality deposits, and they are losing vast amounts of money at current uranium prices. Can it continue for a little while? Sure, but can it continue for the longer term? No. And remember that when you don't make the sustaining capital investments, which of course Paladin has been unable to do because the cash has gone for debt service, not only do you reduce the capability of producing over time, but you raise your unit costs. You get involved in a really sort of negative feedback loop, which the industry is right in the middle of right now.
Rick, sometimes at the bottom, investors need a bit of a pep talk. I remember sitting with Doug Casey in Argentina a couple years back, and after listening a bit to what I was investing in, being the junior stocks, he cocked his head sideways a bit in that Doug-esque style and said, "Colin, I think you're going to make a heck of a lot of money." And then he proceeded to recall the days when he would look at his portfolio as a younger man and saw double-digit gains day after day and week after week in these junior stocks. Rick, are those days coming again?
In a sense, I hope not. The junior market is still way overpopulated with companies. And it would be lovely, I think, from everybody's perspective, to see the recovery be slow and drawn out and favor the best of the best at the expense of the many in the market. It would be great if speculators had another year and a half to learn from the ugly experiences that they've had in the last 5 years and not get bailed out by the market for the stupidity that they've exhibited over time. So from my own viewpoint, I would prefer to see a saucer-shaped rather than a spiky recovery. And I would prefer to see the recovery very uneven, rewarding rationally successful efforts while continuing to punish the pretenders.
Rick, final question for you here. As a libertarian yourself, I'm sure that the idea of cryptocurrencies excite the heck out of you in theory. I know from a previous interview I saw you said that you had sold your Bitcoin, which is great that you've made a profit there. A lot of people could compare what's going on in the crypto space now to the beginning of the tech bubble, and if they look at how much the market cap of the cryptos are worth, they can say it's not that significant yet, even though the gains look like a bubble. What do you say to that?
Well, I think both statements are true. I think that distributed ledger and the blockchain are going to change the way financial markets act. There's no particular reason why the distributed ledger couldn't replace the exchanges as we see now, and most of the brokerage firms that we see now, basically disintermediating out the intermediaries, which would be really, really, really a nice thing. That doesn't mean that cryptocurrencies are on an ever upward path with no correction. The chart that you see in some of the more broadly available cryptocurrencies, including Bitcoin, is extremely familiar to me. And my experience is that mostly the backside of that chart is just as steep as the front side. Ironically, of course, if Bitcoin fell by 50 or 60%, all the pundits would pull their hair out and say, oh my God, it was just another scam, blah, 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 blah. You know, Colin, I was talking with Lucas Lundin last night on a related topic, and I don't think I've ever had a 10-bagger in my career. That is a stock that goes up 1,000%. Without that stock falling 50 or 60% once or twice during the period of time I held it. So if the Bitcoin price got cut in half or fell by 60%, it wouldn't have much of an impact on how I thought it would perform over time. I sold my Bitcoin not because of any lack of faith in Bitcoin, but rather as an expression of my own ignorance of the fundamentals of the Bitcoin market and the fact that I made so much money so fast with so little effort or understanding on my own point of view that I just decided to take the money.
Well, there's nothing wrong with taking a gain, so probably a prudent move there, Rick. Rick, thank you so much for coming back on the program, and looking forward to getting you back here in a few weeks.
Always a pleasure, sir. I look forward to addressing your audience.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be? It actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel.